This video will discuss our approach to what is commonly referred to as support and resistance. I personally don't think there's anything that really means support. Everything is resistance. It's either resistance to going up or it's resistance to going down. But in any event, you'd like to call it support and resistance, so we'll go with that. Now, the chart that you have on the screen here is a 5-minute chart. The bands that are on this chart actually represent a market profile indicator. We have not written our own market profile. We use a commercially available market profile indicator, actually a series of them. And you come to our demonstration, we'll be happy to disclose more information about that. But the standard market profile is made up of 3 lines. Typically you will see them as flat lines, but as those lines do move throughout the day, we're using a banded approach to show you how those lines are actually moving in a 5-minute chart. Now, the standard approach, 3-line approach, will have an upper value area, a point of control, and a lower value area. The question that we'd like to raise, however, is why do we find resistance, for example, as we exceed the upper value area here, which is represented in magenta? This particular line is a calculated line off of the previous upper value area, as well as the magenta line that's below. These are calculated values. We won't go into that calculation. That's sort of irrelevant to our discussion. But the point is, why do you find resistance here? Why do we find support right in here? Why do we find resistance here? Why did it short over here? And why did it ricochet at this point, but right over here, at that point right there? Why didn't it go up a couple of ticks more to hit the upper value area, but instead shorted there? Well, there may be a variety of answers to this question, but we believe that it has a lot to do with what else is being traded on the exchanges. Now, there are many other markets that are out there besides the ES futures. By monitoring those other markets and generating a profile on them, we believe that we can identify more specifically where these pivots are most likely going to take place. So what we're going to do now is bring up on the screen 3 other markets. We're not going to go into what they are, but 3 other markets that we watch and where a tremendous amount of volume is being generated. And we believe that those other markets have a lot to do with why these pivots are taking place. So let's bring those up on the screen. What we've placed on the screen now are 3 other heavily traded markets. We have placed a profile on each of them, and we believe the interrelationship between these other markets has a great deal to do with why we see pivots taking place on the ES at a time that doesn't seem to agree with the profile itself. So for example, we'll look at our first period right over here. All right. Now we've come down to this magenta line, and we bounce off of that. We find support there. Why? Well, take a very close look at these other markets. On the same bar, this market in subgraph 2 fails to hit an equal low. While this is hitting an equal low, this is hitting a higher low, and this is a very heavily traded market. There's your support, and there's your reason. You've got a divergence here. You find it here, and you find it here. As the market now begins to rally up, we come to this point on the ES, and on these two markets here, we've just reached the peak. All right, the peak of the calculated value has been achieved right at that particular time, and we find resistance here. This has exceeded the peak, but here it has not. There's your resistance. Let's come to this point. Now, we hit a new high on the ES, but we do not hit a new high on our secondary market here. There's resistance. And we get a corresponding move down in the ES. And that's not to be ignored. Consider what's happened here. She's dropped from 80.5, okay, 80.5, get it in here, down to 77.75. That's a good trade. Now, let's look at our next point. We come down to this value right in here, and we get support. Why? Well, look at what's happening right down here. We've come down to the point of control. We've exceeded it in the other markets, but here it's come just barely down, just a little bit further down than the point of control at that particular time. And then we have, look closely, a divergence. There's the low, and that low is an agreement, and we've got a divergence on our next bar. We've got a higher low, and up she goes. Now, this next point is really interesting. On this bar here, keep in mind it's 80.5, it's 80.5 here. We're hitting equal highs, but we fail to hit a new high or even an equal high here. We fail to hit a new high here, or at least an equal high. Same occurs here. And in this particular case, all right, that failure shows our other markets hitting an equal high over here, but at a level by way of the graph that shows resistance. And here on the subgraph 4, we find that it's only making it up to the upper value area. So you fail here, you find resistance here, you fail here, and only up to the upper value area. No wonder this shorts. Let's go to our next point. Now it comes down and it finds some support. Well, look at what's happening on our other charts. right down to the lower value area, and up she goes. Get the point? Now let's take it over here. Now look closely at what has happened to the other charts. Here was the high on subgraph 2. We failed to make even an equal high here. We find resistance at that level, right there, and we find resistance on this graph as well. So the failure to make a new high here seems to be a very compelling reason also why we fail to make it any higher, and in fact short. So on all of our charts, we've failed to make any kind of a new high, but on at least this particular market, it just barely makes it up to the high of the day. And in fact, it doesn't succeed. And consequently, this market begins to short, pulling the rest of the markets down with it. And then our last line over here, again, we don't even make it up to the upper value area, but here you do. You make it to the upper value area and find resistance. And then the market shorts even further. So by way of plotting and keeping track of other market profiles on those symbols which are heavily traded, we believe we can make a better informed decision of what to do with the ES. And this is our current approach that we're using, and we're finding that it works very, very well. But you've got to have the right symbols up on the chart, the right kind of indicators plotting the profile. And for more information on that, please take a demo with us. Let us show you how we're doing this, and we'll be happy to assist you to better trading. This is Rod Kusin and Spooman for Risk.